Hey everyone, welcome back to Fiscal Voyage. Today's video, we're going to talk about Lockheed Martin. I have a subscriber request over here, Adish Really. Thank you for commenting and subscribing to the channel. You guys do the same thing and then request some stocks you want me to cover. He wanted to see a video on LMT, which is Lockheed Martin. So here we are. So we're going to do a stock analysis on Lockheed Martin to see if it's a good buying opportunity at today's price. So first off, we're always going to go to fast graph here. If we take off the monthly or the weekly closing price, you can see here the company has been growing very nicely over the past 20 years. It's been growing around a compound annual rate of 11%. But we're showing this time period to more, maybe around 9 or 10 years. You can see here it dropped from 11 to 9%, which is still really good. Earnings had some down years in 2021, down 7%, and earnings down 5% in 2022, picked up nicely in 2023. This is with like the war and stuff like that, but then dropped significantly 20% in 2024, but expected to pick up very nicely double-digit earnings growth for the next 2 years. And if we put the price on the chart, we can see that the price is about fairly to slightly overvalued on Lockheed Martin here. There's been very small opportunities where the stock had a PE under 15. So you can see here before the 08-09 financial crisis, always had a PE around between 20 and 15. And you can see here, 15 and as high as 17 here. It got over here 18, over here around 20. So around this time, there was plenty of opportunities to buy it at 15 PE. And then after the market crash at 08-09, you can see here I had a PE around 10, 9, as low as some 8, 8.5 or 8.7. So you can see that a great buying opportunity during this time period. Unfortunately, I wasn't investing until then. I started investing around 2013, 2014. But nonetheless, great opportunity here. Then after 2014, the stock's been not overvalued, but times past the 15 multiple. There's been opportunities. You can see here, for example, under the normal multiple around 17.7. You can see over here 2015. Then over here touch the 15 multiple in 2018. Then during COVID, it went under the 15 multiple around 13 multiple. Over here 2021, and again 2021. Out of under 15 multiple, and then over here a slight touch around the $400 price mark area, and then it had a recently run up. You can see here as high as $611, a 26 times multiple of earnings, and then now we have a multiple of 19.5. Is okay, not great. I personally would like to see a pullback, maybe to the $400 area. That should give you over here, based on earnings of 2025, should give you around a 15 multiple, slightly higher. I think $400 area is a great buying opportunity. But technically, I'm going to show you why, it might be a good buying opportunity now. And I'll show you technically later on in this video. But let's go talk more fundamentally why Lockheed Martin is a good company. I own shares of Lockheed Martin. I have it slightly under 400. I think I like $390. I think I bought it around this time period here. So I own shares. I would like to buy more shares, but I think I'm gonna hold off at this current price. But I'll show you technically why it's possible that I could bounce from here. But here S&P credit rating of A-, which is investment grade. A nice dividend yield, almost 3%. Earnings yield is low. I like to see this 6.5 or higher. So this kind of runs the reason why I'm not buying at the current price. Again, I want to see it close to the 15 multiple before I buy shares. But we go to forecasting. Forecasting looks decent, expected 12% annual growth, but again, it's slightly overvalued. And long-term growth, you can see here, long-term growth looks good. One analyst, but again, it has to stay around the 20 multiple. This is why I would like around the 15 or 16 multiple. It gives you kind of like a margin of safety. So that's what I want to see. Analyst scorecard is pretty accurate, or the company beats analyst expectation, which is good. So that looks good. And if we go to CFRA gives it a hold rating with a $488 price target. and a 3-year earnings growth of 5%, which is good. You can see here earnings are expected to grow again as well as fast graph, $28.23 and $29.89. So that looks good. And then if we go to down here, it has a fair value around $421, and you can see here around 440 the current price. So it's slightly overvalued based on CFRA, but they have a nice price target around $40 more than what it is now. Morningstar gives a 4-star rating with a fair price of $530, which is good. So that looks great. Fundamentally the company looks good. If we go to some other thing, operation cash flow, you can see here they expected to grow 24%, and it covers the dividends. Free cash flow covers the dividends, supposed to grow 28% and stay flat for a few years, but overall it looks good. Sales is expected to grow 6% and then 4%. So all of that looks pretty good. And now if we go technically, this is why I think it's a good buying opportunity, technically wise, because you can see here, this is the monthly closing price we got, and the monthly moving average, the 50 moving average. And you can see here how it bounced here, bounce here, bounce here, bounce here, bounce here, got near it, bounced there, and now we're there. We actually touched it and it's bounced. If we go back and look at the daily, you can see here it got down to $420 and now it's $450. So it's had a nice little run up for $420 to $450, and that run up is about, let's see, from the low to where it is now is about 7%, 7.5%. So it had a nice run up the past few weeks, but you can see why now is a pretty decent, I wouldn't say great buy. I think it's a decent buy if you don't own shares of this company, or if you bought shares at a higher rate, maybe $500 or so. It'd be a good time to kind of like average in right now and lower your cost average, and then after that we'll just wait. You can see here there's a nice trend on the monthly, on the 3-month chart. Very nice trend. And draw it right here, right there. You can see right there. But if it breaks this trend, it's gonna hit $300, and that's where I kind of, I would buy more at $400, and then after that wait and see if it hits the $300 mark. That's kind of like what my game plan is for this, for Lockheed Martin, because the $300 mark, you can see here on the monthly, is also some good support area. We're gonna draw it right here, kind of right there. That's the support area, 320 to 330. Great support area. Obviously during COVID it dropped down to $266, and if it gets down there, I'm gonna be buying a lot more shares, because that area looks very nice. You can see kind of right there. So we got strong support here near that support, and then it will coincide with the 200 monthly moving average, right in there around 250, or it could go higher depending on the time frame it gets there. But if it goes straight down, this is definitely a great buying opportunity at 250. I don't see that happening. I do see that $400 being tested. Again, this is where I will buy more shares. You can see here, kind of right here, great support around the 400. Big red bar, then whoop, buyer stepped up, kind of retested there, and then it just ran up. So that $400 area is where I would be buying more shares of this company. It's kind of where my average is as well. So I would like to, get more shares. And then after that, I will wait and see what happens. And then if it comes down to this 320, 340 area, that's why I'll be buying more shares of this company. So that's kind of like my game plan. But like I said, it's not a bad time to buy shares, and I show you why again on fast graph. If we put around this time period, if the company stays around a multiple around 19.5, you can see here you average around a 12.7% annual rate of return for the next few years, which is good. It's good. I'll take that all day long, right? But I think it goes lower. We'll see what happens. But I think it goes, it breaks that monthly moving average, the 50 moving average, and goes lower around the $400 mark. and that's why I'll be buying more shares. I think it does that. We'll see what happens, but I'm happy with the current shares I have. But overall, it looks great. And I own shares of this company, and I would like to buy more, just not this price. I want a little lower. I want this around 6 earnings yield of 6, maybe 3.2% dividend yield, more closer to around a 15 multiple, and then I'm buying, and then I wait and see to see if it goes any lower. But that's kind of my game plan. But like I said, at the current price, it's not bad, but I like to buy great prices, right? Unless it's extreme high quality, which this one is extreme high quality. A-rated company performance. You look here, the past 20 years, been growing dividend very nicely. Has a low payout ratio on 57%. So everything looks good. Everything looks good. So that's why I'm saying it's not a bad time. For example, I bought Pepsi recently. Almost near the lows of the recent lows, and it doesn't give me an earnings yield of 6.5 or more. But it's such a high quality company, I wanted to buy more shares of it. So it's kind of like the same story here, high quality company at this current price. So I don't think it was not a bad buying decision. I wouldn't go all in at the current price, that's for sure. But say for example, if a stock in your portfolio is say 10 grand is your weight that you would like each stock to be 10 grand. So maybe buy 2 to 3 grand worth of shares at current price, and then wait and see. If it goes 5 to 8% lower, buy another 2 to 3 grand, kind of like that. That's kind of like what I normally do. I average in stocks, and so that's kind of the story here at Lockheed Martin. Thanks for watching, guys. Again, if you're new to the channel, make sure to hit that subscribe button. And if you want me to do an analysis on another stock that you're looking at, trying to see another different person perspective and things like that, make sure to leave a comment of the ticker symbol and what's your thoughts on that stock and why should I evaluate it. Thanks for watching. I'll see you guys in the next one.